Okay, let's have a look at EasyJet. Not one of my favorite stocks. I always have an inclination to short it because I just think it's a very bad business model trying to get a pound out of in the passengers. Nevertheless, the reason I want to look at this from last month is because I got a question about Bollinger Bands. And people ask me, well, you mentioned Bollinger Bands, could you say a bit more in the monthly update? And that's why the monthly updates are great, because it allows me to discuss things which people might not have had clarified, because it means if one person had a query, then probably quite a few others did. First of all, what are Bollinger Bands? Well, they're these red lines here, these three red lines you can see here. And what do they represent? Well, they're the standard deviation of the average share price over a given period of time. What does that mean in English? Well, the standard deviation is how widely, you can think of it as how widely around the average price, the share price on average tends to move. In other words, it's almost an average of an average. If you take what the average price is, and then you say, well, it tends to fluctuate around that price, maybe goes up 3, goes up 4, goes up 5, and then drops beneath it as well, and you take out, well, okay, on average, how much does it tend to move above and beyond? And that's what the standard deviation will tell you. It is basically an average of how far you can expect, how widely you can expect the price to go up and down. And one standard deviation roughly equates to there being a 66% probability that the price will be within one standard deviation at any one time. How does that work out? Well, it's statistics. Don't worry about the maths of it. But what it means is 2/3 of the time the share price will be one standard deviation of its average price. Okay, fine. How do we use that in trading? Because it was a lot of mumbo jumbo to a lot of people. And don't forget, if at any point you want to pause what I'm saying, use the space bar on your keyboard, use the arrow keys on your keyboard to go backwards and forwards if you want to re-listen to anything. So, I explained what Bollinger Bands are, but what did I mean practically? So what, you might say, and this is one standard deviation above the average, one standard deviation below. Well, we don't actually use them to say, oh, the market's definitely going to be, if it goes above it, you want to go short, if it goes below it, you want to go long. Though some people do that. They say if the price falls below the Bollinger Band, they're looking to be bullish, and if it goes above, they're looking to be bearish. And the reason for that is if it goes below, then it's outside its standard deviation, it'll probably revert back into a more normal trading pattern. Now, that's not always the case, and I think it's way too difficult to trade that kind of pattern, so I don't tend to use it for that. What I do use it for is to say that Bollinger Bands can act as resistance for the price. It's just the way it works. Price tends to touch them and then fall off, so it gives me a bit of a warning sign. It's not a trading mechanism, it gives me a bit of a warning sign. Also, once Bollinger Bands tighten, that is narrow, as you can see here, it usually means that the price has not been very volatile for a period of time. And when a price hasn't been volatile for a period of time, it tends to get volatile after a period of lack of volatility. Why would it do that? Well, because volatility also has its averages, and share prices revert to mean. In other words, if they've had a quiet period, they tend to get overexcited. If they've been overexcited, they tend to go through a quiet period. It's the nature of the beast. Things revert to their long-term averages. So in this case, when Bollinger Bands tighten, it suggests volatility is reduced, which means that there might be a major price breakout. Well, why do I want to know this? Well, imagine you've got a trading position open. You want to know it, or you're looking to open one. It's an additional factor to bear in mind. You think to yourself, ooh, should I go long? EasyJet, look at the MACD, it's been going flat for a while. I've got a positive divergence on the stochastic over here, in that we've got a higher low, and the price hasn't really confirmed that. It's only done it a little bit, but certainly not by the same angle, and arguably not at all. The MACD, well, pretty poor, but arguably a positive divergence there as well. It's certainly broken above its signal line, which is positive from an oversold position. So that would suggest around that point that we should be a little bit bullish. So what direction might the stock go in? Well, given the angle of inclination of the MACD, it's rising strongly, and that the Bollinger Bands have tightened. If I was going to take a bet, I'd probably say upwards. Now, I'm saying this actually in this case because classically we do know what happened with EasyJet. It's been so much in the news, but you can see the anticipation of why that might be the case. The MACD rising sharply and the Bollinger Bands tightening, suggesting a very volatile move is coming up ahead. What happens if I move forward one day and another day and another day? We do see that volatility reflected. We see the classic reason why we use Bollinger Bands. We don't use them as the only trading tool or mechanism. They're actually used in conjunction with others, and you can see why I don't tend to use it as a sell point in itself, but almost as a warning signal. Like, it's going to be more difficult for this stock to break ahead. It's going to have to go sideways within the Bollingers before it can even think about going any higher and anywhere upwards, and that indeed is what happens over there. It's very difficult for the price to stay outside a Bollinger Band for a long period of time. It gives us some degree of understanding where it might go next. So that's my explanation of Bollinger Bands. If you see what I'm saying, it's very, you might say it's arty-farty. You can't just say, oh, if it goes 1% above, sell short. It is a question of sentiment, a question of feel. As a discretionary trader, what we're looking to do is we're looking to say, do we still want to be in this trade? Is it still looking good for us? If it is, let's push it higher. Go for it. If it isn't, let's look to take some money off the table or set a very tight stop loss, maybe at a 1-day or a 2-day low. So in total, that was Bollinger Bands explained as part of a broader trading system for the listeners who are querying about how we go about using them.